Traders, today we are going over the 5 millionaire day trading success steps. The number one step is going to be creating a watch list. Now, why is creating a watch list so important and number one? I'm glad you asked. I'll tell you. I have seen so many traders blow up because they are taking so many random trades. Well, guess what random trading equals? Random results. We want to narrow in our focus. We want to KISS, keep it simple, stupid. In day trading, less is more. See, day trading can be gambling. It can have that scarcity loop because we have the opportunity to trade as much as we want. We have the random unpredictability, the opportunity to make a ton of money, or the opportunity to make a little money, or the opportunity to lose all our money. And 3, we have quick repeatability. So you can just keep doing this process over and over and over and over. And that loop is exactly what casinos do. It's exactly what social media does. It's exactly what dating apps do. That is how you lure people in. You have to fight against it. Trading is all risk management. It can be gambling, but the difference is gamblers, all they focus on is profit, money. Keep spinning that wheel, baby. We're going to hit it big. And day traders focus on risk management, which leads me to my second point, predefine risk. I cannot explain to you enough how important predefining your risk is. Know your risk before you enter the trade. That's what I can say. If you have your watch list and you know exactly where your entries and exits are before you enter your trade, you're doing 99% of the trade before you ever even click the button. Clicking the button is just 1% of the trade. And because we're all prone to being an amateur and adjusting our risk parameters mid-trade, yes, we've all done it, the stock keeps going against us, and rather than sticking to our mental stop, we say, let me scale into it a little bit. It might come back around eventually, and then you turn into a bag holder, aka long-term investor of a company that you know nothing about, and that's doomed for failure. So that is why I have my third step, which is a hard stop. It's not a mental stop, it is a hard stop. It's preventing you from going deer in headlights. Let's say you buy a stock and immediately they come out with a secondary offering and the stock tanks and you're left sitting there like a deer in headlights. It's called analysis paralysis. You don't know what to do. And if you just would have had a stop in place, it would have saved you. You might have got slippage on it, but at least you wouldn't have become a long-term investor of AMC or GME. Number 4 is trail a percentage. One of the hardest things for me is allowing my winners to run. Well, that's the only way you're going to make money. So set a hard stop, set a trail, which means what? It lets your winners run. Needless to say, it's so important in our trading to be very rigid with our rules and flexible with our expectations. The market can be irrational longer than we can be solvent. So expect the irrationality. You're not going to be right every single time. You can be right 75-80% of the time, but eliminate your ego from the picture. Expect the unexpected and be prepared for it. And then the last and final step is repeat the process. Rinse and repeat. If you enjoyed this content, hit that like button for me and the subscribe button. We'll see you guys next time.